So if you hold 10,000 XRP, will you become a millionaire? I want to give you guys an accurate and a realistic XRP price prediction in this video. And I also want to talk about, Bitcoin. I want to talk about Bullinger Bands, how to use them in crypto trading. This is going to be a great video for you to understand how to analyze what's going to happen next in the market based on moving averages, Bullinger Bands, lots of different detailed breakdowns that you guys are going to love. So comment 777 if you're feeling blessed. Comment 777 if you're feeling bullish. And if you're going to become the first millionaire in your family tree, confirm it by subscribing to the channel, tapping that like button. Let's run it. All right, bull runners, welcome back to the channel. So XRP is sitting at 51 cents right now with a $27 billion market cap. And I've seen some crazy XRP price predictions thrown out there of 50 bucks, 100 bucks, 1,000 bucks. Even some people saying that the price of XRP is already predetermined by the IMF in the thousands or even over $10,000. Now, I'm not here to say that XRP is going to go to any price. I'm here to give you a solid understanding on how you can look at charts and know what's most likely case scenario, and also have a realistic price prediction by the end of this video. So this is not financial advice, no investing advice. Don't buy XRP, don't sell XRP. Watch this video for educational purposes and example purposes only. I'm going to give you guys a lot of good information by the end of this video that will make you better at looking at charts and just getting an understanding of what's going to happen next through Bullinger Bands. So let's talk about how to use Bullinger Bands in trading. So Bullinger Bands are a technical analysis tool using price volatility to provide probable entry and exit opportunities in trading. They are made up of two outer bands or lines and a center line. And the center line is the simple moving average for a 20-day period, which enlarges and contracts in response to changes in price action. So for thorough market analysis, it's frequently utilized in conjunction with other technical indicators that I'm going to be talking about, like moving averages, relative strength index, and other tools as well too. And so Bullinger Bands were created back in the 1980s by a guy named John Bullinger, and they're a useful trading tool along with other financial market tools to evaluate price volatility, pinpoint probable reversal points, whether they're bullish or bearish reversals, and make your trading decisions. And so what we're going to be looking at over the next couple minutes is two outer bands. One is the upper band and one is the lower band. So the upper band's in green, the lower band is in red, and then the simple moving average in the middle that makes up the Bullinger Band. So there's generally four purposes of Bullinger Bands in trading. Number one would be to assess price volatility. Number two would be to identify overbought and oversold conditions. Number three is to determine the trend direction. And number four is to generate reversal signals. So first is assessing price volatility, because when the bands widen, meaning that the space between the upper band and the lower band gets larger, there may be trading possibilities because it suggests higher volatility as the bands widen. And then on the other hand, a contraction in these bands denotes less volatility and the potential for price consolidation or trend reversals. Now, we're going to discuss, how to identify a trend reversal when a contraction of the bands takes place. So as we can see back here in 2017, when XRP went on this massive bull run, you saw a massive expansion in the Bullinger Bands between the upper portion of the band and then the lower portion of the band. Even the lower portion was all the way down at negative 13 cents, which I know it kind of throws it off the radar because no trader could have predicted this to happen. Now, one thing that was interesting is, as you guys can see here, when XRP reached, about 40 plus cents, 40 to 42 cents, we also got an oversold territory on the RSI, reaching upwards of 92 all the way up here. Even right here, when XRP went on the first rally to start, that was at 7 cents, and we were upwards of 90 plus on the RSI as well too. We came back down and then peaked up one more time before we saw this consolidation period back within the bands. And so anytime we see the price action wick above and trade above the upper portion of the Bullinger Band, depending on what time frame you're on. Right now we're on the weekly right now. That can signal overbought conditions, right? If it's above, it's in overbought conditions. If it's below the Bullinger Band, it's in oversold conditions. And we also want to look at the RSI as well too. And so that brings me to number two, is identifying overbought and oversold conditions based on price volatility. So here's how you do it, okay? A potential selling opportunity arises when the price reaches or exceeds the upper band, which is a sign that the price is overbought. And simultaneously, when you can stack other indicators showing the same signal that it's overbought, then that strengthens your trading decision. Meaning that, if you're stacking like the RSI, the MACD, and the Bullinger Bands together, and then multiple others that we're going to discuss in other videos, then it'll make you a better trader. So on the other hand, if the price reaches or drops beneath the lower band, it can be considered oversold, indicating a potential purchasing opportunity. So before I get into moving average crosses, let's discuss overbought conditions and give you guys some examples. Because when XRP was declared as not a security post lawsuit, we saw XRP run from 45 cents upwards of, almost $1 in the 90-cent range, right about here. And simultaneously, we saw the price action go above the upper band of these Bullinger Bands that you can see in blue right here. And now on the RSI as well too, we saw XRP trade above 74, which is overbought territory. A lot of people were expecting XRP to continue trading further to the upside, but as you can see right here, being in overbought territory, we traded back to the downside. Now, where are we right now? We're at 48. So we're right in the middle. Anything above 70 is overbought, meaning that it's a good selling opportunity. Anything below 30 is oversold, means it's a good buying opportunity. And anything in the middle is consolidation and accumulation phase, and it's a good holding opportunity. So let's look at the past and let's give you guys some examples of overbought conditions and good selling opportunities. Right here in the 12th of April, when XRP traded upwards of $1.90 plus cents, almost to $2, you can see we were above the upper band of the Bullinger Bands. And simultaneously, when you stack that with the relative strength index, you can see that we were at roughly 80 on the RSI right about here. Now, a time before then was the 23rd of November 2020, when XRP was at 77 cents. We were also above 80 on the RSI. We were about 85 or 86, and we were at above the upper band on the Bullinger Bands. And if we go all the way back even further, you can see the all-time high. It's very, very clear that we were in overbought conditions sitting at 94 on the RSI. So when new investors and new cryptocurrency people in crypto that were learning about the markets were coming to the markets and buying right here at the worst possible time to buy XRP. Now, don't get me wrong, in the macro, if XRP continues to see massive bullish momentum over the next decade, well then buying at $3.80 is not that bad if XRP goes to 15, 20, 30 bucks, but it's better to have a, better entry point by understanding this type of stuff. And so even if we go all the way back to 2014, you can see right here when XRP was sitting at 0.03 cents. Now, don't get me wrong, not a bad time to buy if you're holding for the macro, but if you're planning on trading on the day or on the hour or on the weekly candles, it's valuable and it's mandatory that you understand this type of stuff. So on the RSI, we can see that we were sitting at 88 on the RSI. We were at the above the upper band on the Bullinger Bands right here. And then we saw XRP drop after that, about 85%, even all the way down to this wick of January 2017, 89%. So if you would have put, $10,000 into XRP right here, well, you would have lost, 90% of that. You would have only had $1,000, but then it would have taken off after that. So regardless, when you buy XRP, if you're holding for the macro, I believe you'll be all right, but it's good to understand the best entry points and the best exit points based on these examples. And so how do we identify what's going to happen next based on where we are right now? Because we're in the middle. So anything between 30 and 70 is time to do what? You guys let me know in the comments below, okay? It's time to hold. Anything below 30, great time to buy. Anything above 70 is a great time to sell. Now, number 3 is determining the trend direction to understand what's the most likely scenario to happen next, because using Bullinger Bands to ascertain the prevailing trend direction based on the price indicating an uptrend if it is constantly moving along the top Bullinger Band. On the other hand, if it is frequently touching or remaining close to the lower band, it can be a sign of a downtrend. So if we look back to March of 2020 during the pandemic, when XRP dropped all the way down to 11 cents below the lower Bullinger Band right here, we were also simultaneously sitting about 30 on the RSI, and then we bounced off of the lower portion of the band. Now, what's interesting about that is before then, on December 19th, we saw a cross of the 50 moving average in blue below the 200 moving average in red, signaling a trend reversal. However, we had this black swan event. Now I want to discuss what happened recently as well too, because we saw the 50 moving average in blue cross below the 200 moving average in red on the 2nd of January. And that was when XRP was at the low at 28 cents. Very similarly, when we saw the cross below, XRP was at the low of 16 cents, then one black swan event to bring it down below the 50 moving average. And so I want to discuss the most likely case scenario based on the moving averages crossing in the past and the moving averages crossing this year, and where we are right now in comparison to that. But as you guys can see, to identify, the trend direction, we can see multiple times that the XRP price was at the upper portion of these Bullinger Bands all the way until the top of April of 2021. And it didn't really come back down to the bottom portion of the band until November of 2021, after the moving averages crossed, where the 50 moving averages crossed above the 200 moving average, signaling a trend change right here in the bear market. And so because we crossed back above, we're in an uptrend. And as you guys can see as well too, this upward trending yellow support line right here, signaling the uptrend since June of 2022. And also when we saw the moving averages cross, that was the low for XRP at about, 20, 30 cents right here. It almost wicked to the low of June of 2023. But on the macro scale, I know there's a lot of circles here. That could be considered very similar to this point right about here when the moving averages crossed. And where we are right now in comparison to the last, bear market going into the bull market could be compared to right about here, where we are seeing a back test of this downward trending resistance, which was resistance right here, acting as support and rebounding off of that. Similarly, we saw something happen where we see this downward trending resistance from April of 2021 right here in yellow. We saw the moving averages cross, the 50 cross below the 200, and then we saw XRP break above the 50, retest the 200, and then back test this downward trending resistance as support and rebound off of it. Now, the most likely case scenario, in my opinion, could be a back test of this upward trending support line right here of roughly about 40 cents one final time before we break out of here and trade bullish. And anything below that coming back down to this support, which was resistance right here within this range, would be a black swan event. That would be potentially the Fed shifting from QT to QE rapidly, drastically cutting rates, the 2-year to 10-year inverse yield, right? The inverse yield flipping positive drastically, and seeing another massive market crash one final time, a black swan event like a pandemic, an EMP attack, World War III. It'd have to be something crazy for XRP to go down to 27 cents all the way down here. But I do think we will see one final dip and then XRP will break out of here. Now, if we're looking at trend direction, well, XRP has bounced off of the upper band on these Bullinger Bands multiple times, even traded above it. So because we've seen XRP bounce off of the upper portion of the band more times than it has the lower, that's signaling that we're in an uptrend. And also because we can see the price action trading to the positive with higher lows, then XRP is also favoring a move to the upside. Now, number 4 would be using Bullinger Bands to identify possible trend reversals, because a possible reversal from an overextended condition may be indicated when the price moves outside of the bands and then re-enters the band. So below the lower band would be for a downtrend, or above the upper band would be for an uptrend. Now, because we still see XRP holding this upward trending support all the way since June of 2022, we're still going to remain in the uptrend. It would only be if we were to see a sell-off to the downside, break below this support, come back to retest it as resistance, would be when I would reevaluate what's going to happen next on XRP. But ultimately, I do feel we would bounce off of this upward trending support if we see any further sell-off to the downside. So to identify good buying and selling opportunities using the Bullinger Band, if the price touches or swings outside of the lower band, it can be a sign that the market is oversold, presenting a potential buying opportunity. And the band's breadth provides information about the market volatility, because, like I said before, broader bands denote higher volatility, while narrower bands denote lesser volatility. So that brings me to the Bullinger Bands squeeze strategy to identify when there is going to be a massive breakout. And it's based on the idea that times of low volatility when the bands are squeezing together in crypto refers to as the squeeze, and it's frequently followed by periods of high volatility referred to as the expansion. And so, number one, how do we find the squeeze? We got to look for the squeeze here. Find your main squeeze, okay? If you don't have your main squeeze, I'm going to show you how to find your main squeeze right now. So watch for times when the Bullinger Bands narrow and move in closer proximity, which is a sign of a decreased price volatility. So when we look at Chainlink right here, since the 12th of September, we can see a squeeze taking place in the bands for 371 days. And so for over a year, Chainlink has been consolidating sideways right around, the $5 to the $9 price range. And so the breadth, which is the width between the upper band and the lower band, has been squeezed together. And when you were to compare that to the bull run, you can see, the space in between these bands is massive. On these massive breakouts, it brings the lower portion of the band out of proportion, way to the downside. And so compared to where we are right now, Chainlink is about to experience a massive breakout, and then also preparing for a breakout. Now, after a squeeze, you can expect a strong price change. Now, it doesn't mean the price change is going to be to the upside, because it could also be to the downside, depending on macro market trends and other indicators that we need to look at. You don't foresee the breakout's direction, but you can get ready for it based on other stuff. So how do we know if Chainlink is going to break to the upside or it's going to break to the downside? And also, how do we know the good entry point? Because entering positions following price breakouts, you're not entering, during a squeeze, you enter during a breakout to confirm the price direction, to confirm a trend reversal. So once you see a break of the upper band after a long period of a Bullinger Band squeeze, that could signal a trend reversal to the upside. On the contrary, if you see a break below the lower band, then that would signal a trend reversal to the downside. And so for Chainlink, we can see this downward trending resistance right here. If we were to see a break of this resistance, roughly $8, right around this range right here, to the upside, followed by a back test, that would signal a trend reversal, and I would expect Chainlink to continue to the upside. On the contrary, if we see Chainlink break to the downside below, roughly $4.80, this downward trending support right here, and we see a back test of it as resistance, I would expect Chainlink to continue to the downside with the rest of the market. So the main thing to watch is the upper portion of this band, this upper resistance, and the lower portion of this band to signify a trend reversal. Now, looking at the RSI as well too, we're sitting at 54 on the RSI. So because we're not in overbought territory and we're not in oversold territory, what does that mean? Well, it's a good time to hold. Now, it's not a bad time to buy if you were to, assume that the price is going to go up, but the best time to enter a trade is when there's confirmation of a trend reversal. So we don't do any guessing here. We look at multiple variables to understand when's the best time to enter a trade. So stop loss and take profit. When you implement stop loss orders to limit potential losses, if the breakout fails to hold and set take profit levels according to one's trading strategy, that would be in the case of fake outs. For example, if Chainlink were to break to the upside of this upper Bollinger Band and you enter the trade right here on the back test, and we see Chainlink push it a little bit higher to about $10, but let's say your take profit is upwards of, $15 to $30, and then Chainlink reverses back to the downside, you would want to make sure you have a stop loss. Otherwise, if Chainlink continued to the downside, you would get absolutely wrecked. So what's the best way to set your entry and your exit points based on Bollinger Bands? Because when trading crypto, whether you're doing short-term investments or you're day trading, Bollinger Bands would be utilized for this. Because entry points, when the price reaches or breaks below the lower Bollinger Band, it indicates an oversold scenario. You might seek a buy signal. So in contrast, you would view overbought conditions above 70 on the RSI, above the upper portion of the Bollinger Band, the upper band, as a sell signal when the price reaches or exceeds that band. So there's a saying in trading, it's called let your runners run, where if you sell too early, you're significantly leaving a massive portion of profits on the table. So for example, if we were to see Chainlink break the upper Bollinger Band right here, and then simultaneously you see it get in oversold territory, meaning it's a good opportunity to sell. Yes, that generally would be true. And if you were to short the market, we could see it come back down. However, if the price continued to trade to the upside, well, if you shorted the market right here and you didn't wait, and let's say you bought right here and you sold right here, you're buying at, $5.90 and you're selling at $8.90 or $9 or something like that, you didn't even get a 2x on it. Whereas if you would have waited much longer for it to fill the, the fair value gaps and ultimately trade further to the upside in the take profit range, you could have seen a 2x, a 3x, a 4x, a 5x, potentially even higher. And so that's why being a macro investor and holding for the long term is a lot better, in my opinion, than being a day trader. Sure, you can make money day trading, but if you really don't know what you're doing, then it's going to be tough to make good money as a day trader. So determining your exit points as you let your runners run, for instance, it may be an indication to take profits, if traders are long on a cryptocurrency and the price has been approaching the upper band multiple times. So the first time that it approaches the upper band might not be the best time to sell, but when it does it multiple times and then it drastically overextends it, multiple times, more than 2 or more than 3, then that could be a good indicator that the price is going to experience a trend reversal when you stack that with moving average crosses and you look at other indicators as well too. For example, looking at XRP right here, when we saw the bottom of COVID come in, well, the first time that XRP extended above the Bullinger Band, the upper portion on the weekly chart, was when XRP was at 32 cents. But if you would have bought XRP at 11 cents and sold it 32 cents, that's only 3x. You would have missed out on the 10x because you sold it the first time that it was in overbought conditions right here. And we were only at 68 on the RSI. Sure, you could have sold right here and then entered again right around here at about 21, but you wouldn't know that XRP would stop at 21. You know what I mean? Like, you wouldn't know. So sometimes if you're getting greedy to the downside, meaning you're waiting for another dip, then you would miss out, because if you would have thought XRP was going to go to 17 cents and it didn't fulfill that limit buy order, and then XRP, traded further to the upside of 80 cents, well, then you would have missed out on that opportunity. So this is the second time that XRP went above the upper Bullinger Band right here and simultaneously went above 80 on the RSI. Now, this would have been a good point, to take some profits right here, because then we saw the price crash all the way back down to 17 cents post lawsuit. And so, either way, if you would have held for the third time that went above the Bullinger Band, thinking about like 3 strikes, you're out, right? For the third time that it goes drastically above the Bullinger Band, drastically above, 70 on the RSI, well, selling at about $1.93 wouldn't have been too bad of a decision, because the whole diamond hands philosophy of just hold until the grave is how you go broke. It's not how you make money in crypto, right? Trade these projects, don't date these projects, okay? You're not really holding something forever. The only thing that you might want to hold forever would be land or real estate, right? Because that's real physical. But crypto, you want to trade these projects. And so the third time's the charm, right? Third time above the Bullinger Band. So right now, the first time that XRP went above the Bullinger Band was post lawsuit. I believe XRP will do something like that again. And then ultimately we'll see a reversal, and then we will see another spike in price for the 5th Elliott wave leading upwards of 2025, upwards above the all-time high. So we're going to see massive volatility moving forward in the future, right? We could see another dip down, like I said, to 40 cents to the upward trending support line right here to the lower portion of this Bullinger Band. If we see that happen and we see the RSI dip below 30, I'm not telling you what to do. I personally am going to buy XRP. Like I said, below 30 on the RSI to the lower portion, or overextended to the downside of the lower portion of the Bullinger Band would be a good entry point. To the upper portion, it's a good time to sell a portion, not sell your entire bag, right? Because if you sell your entire bag at, if you sold your entire bag at 30 cents, if you bought down in COVID for a quick 2x, that's like buying Bitcoin at $10 and selling Bitcoin at $30 and not letting your runners run. So have a portion of your portfolio for taking profits and have a portion of your portfolio for the long term. Now, when we talk about combining Bullinger Bands with other trading indicators, one way to do that would be the Bullinger Bands and the relative strength index. And the relative strength index would aid you in possible trend reversals, because a probable slump may be indicated, for instance, if the price is nearing the upper Bullinger Band and the RSI at the same time showing overbought circumstances. So let's look at some good examples of this, because the perfect example would be July 23rd, when XRP was above 70 on the RSI. It was also above the upper portion of the top Bullinger Band right here. A good time not to enter. Like, if you're just holding, that's fine, but that's a bad time to buy. You don't want to buy. A lot of people bought at 90 cents and then they watched the price go down and then they called XRP a scam. It doesn't mean that XRP is a scam. It means that they're bad traders and they were operating off of emotion rather than logic and technical analysis. 3 times before then was April of 2021, November of 2020, and August of 2020 when XRP went above the upper Bullinger Band, above the upper Bullinger Band, above the upper Bullinger Band, and was at 70, 86, and also 81, 82 on the RSI, signaling that we were in overbought conditions. Too many people are buying, and you want to walk away from the 99%. You don't want to do what they do. Okay, if everyone's buying, what do you want to be doing? Well, you want to be selling the greed and buying the fear. Now let's look at times when XRP was to the lower portion of the band or overextended to the downside. Well, as you can see right here, June of 2022, we were riding the lower portion of the band to the downside, and simultaneously, we saw the RSI dropping all the way down to 30 on the RSI. So historically on the macro, this would have been a good entry point of June of 2022 at about 29.30 cents. Now, if you're on like the weekly candles or on the monthly candles, these opportunities are going to be more rare and it's also going to take more patience because you're going to have to wait weeks, months, sometimes even an entire year or 2 years before you see stuff like this take place. And so the rest of this year, if we see XRP consolidate sideways and sell off down to the downside, this would be a dream if there were to be a black swan scenario bringing XRP down to 30 on the RSI or even below then. So I wouldn't even wait for something like this to take place. If we see something like this, that's awesome because I would accumulate more, but there's going to be a lot of panic. There's going to be a lot of fear in the markets. And so you're going to have to completely ignore your emotions because your emotions are going to tell you, ooh, don't buy. Don't buy when everyone's getting out because it's not a good time because guess what? It could go lower. That's what's going to hit your head and that's what's going to hit your heart. It could go lower. That's always the thought process that takes place and the feeling that occurs when the markets are dropping. Ooh, it could go lower, so I don't want to buy now because if I buy now and it drops lower, I'm going to be even more at a loss. And on the contrary, the opposite emotion is when we see overbought conditions, you buy right away because you're like, what if I miss out? FOMO, fear of missing out. I miss out because if I don't buy now and it keeps going up, I never got the chance to buy because it's not going to go lower, right? That's the opposite emotion. So you have to completely ignore your emotions when you are looking at identifying a solid trading strategy. And so another good way is volume analysis, because looking at volume that's coming into the market, when you see an increase in volume during a Bullinger Band breakout, it might strengthen the signal's validity to the upside of a trend reversal. So for example, with Chainlink, if we see a break to the upside and volume coming in as well too, and then macro announcements as well for the company, which they just came out with, that would strengthen the thesis that we are going to go up. Now, also looking at Bullinger Bands and moving averages, okay? Moving averages is one of the best because looking at Bullinger Bands and moving average crossovers will give you a solid approach. For instance, this can support the confirmation of a trend change. So let's talk about moving average crossovers with XRP. So if we see right here, we see the 50-day SMA and the 200-day SMA right here in blue and red. And the last time that we saw the 50 cross below the 200 was back in December, in January of 2020, right here. And so this signaled that there was a trend reversal taking place. Now, we saw that happen. XRP dipped down to the lower portion of the Bullinger Band. We also see the volume pick up after that. You guys can see right here on the lower portion of the screen, right here, the volume, massive amounts of liquidity started flowing into XRP for right here. And we came back up to the upper portion of the band. Now, what happened in March was obviously a black swan event. So that's why my thesis of XRP seeing one final sell-off to the downside would come at the backs of a black swan event. Now, that's something you can't predict for. So it might not happen, it might not happen until like 2026. It might not even happen until 2027, 2028. So you can't get greedy to the downside and be like, oh, I'm only going to buy more XRP if we see a black swan event. But one thing that was interesting is after this took place, we saw a trend reversal. Now, it didn't happen until March, but then we saw the price trade bullish. And we saw that happen after the massive amounts of volume came in. Now, where are we on XRP? There's not as much volume as there was compared to 2020. But when there's times of low volume for a consistent period of time, what happens after that? There will be a time of high volume. Now, I find it very interesting how even with this breakout right here on the end of July for post lawsuit, we didn't see that much volume in comparison to the breakout that took place in January of 2020 right here when the volume was surging drastically. But we did see a cross of the 50 moving average and the 200 moving average back in January of 2023. Now, interestingly enough, when we saw that cross, that's when we saw the wick all the way down to 29 cents. Simultaneously, that was the low for XRP at that time period back in 2019. The only other low that came after that was a black swan event. And so if we were to see another black swan event to the downside for XRP to the lower Bullinger Band right here, I would expect a massive spring off of that and to see something like this take place leading upwards of 2025. And so one more dip, then we go into the moon. Now, I could be wrong there. I could be wrong. But again, very, very similar. The 200 moving average is above the 50 moving average. The 200 moving average was above the 50 moving average until when it crossed over again. Well, that was the peak right here. That was the peak of 2021, the peak of the bull market for Bitcoin. XRP's bull run was cut short because of the lawsuit. This trading volume that took place during this bull run right here was just purely because of the liquidity coming into the whole market, because the lawsuit was still on, Ripple's back, calling XRP a security. And so XRP would have gone much higher if that lawsuit wasn't there. And so that tells me that this next bull run for XRP is going to blow this bull run out of the water. And a 10x for XRP is baby money right there. This was a 1,500% from COVID, 15x, almost a 16x right there for XRP. So if we were to pull, a 10x for XRP from 50 cents right here, so if I were to just measure from 51 cents and we were to see a 10x, that would put XRP at about, $6. If we were to pull a 1,500%, that would put XRP at $8. So in terms of realistic price prediction for XRP, again, don't buy, don't sell XRP based on this, but I think it's possible that XRP could do $5. I think it's possible that XRP could do $10. Anything beyond that would just be massive liquidity flowing in from institutions like BlackRock, Fidelity, all these banks putting money in, spot Bitcoin ETF approval, allowing liquidity to flow into the market in general. And then XRP would absorb the majority of that liquidity because it has the clarity. And then there's an announcement coming up on September 29th for Ripple's party in New York to be ready for. And so we could see a spring out of here just with the excitement for that. I believe it could be the IPO that they're doing in the stock market. Now, how that would affect XRP, that obviously benefit Ripple. The long term, that would affect XRP. One thing that I'm waiting for, massive volume to come in, okay? So because we've seen low volume, what precedes low volume is high volume. There's going to be high volume coming in relatively soon. It won't stay low volume forever unless the crypto market's completely done, which I don't think it is. It's just warming up. And also, we saw a trend reversal right here, January 23rd. We saw a trend reversal back in 2019. After this trend reversal of these moving average crosses, what did we see after that? We saw a massive bullish momentum. Only until the 200 crossed below the 50 moving average is when we saw the price trade to the downside. So because the 200 is still above the 50 moving average, we are looking bullish, my friend. So the only reason why we would see a drastic crash to the downside to the lower Bullinger Band would be an unexpected news in the markets or occurrence, which would result in price gaps that aren't necessarily reflected in the bands, which can catch traders off guard. So it's very, very difficult to predict these things. They're called black swan events. And a black swan event would be a pandemic, right? It'd be COVID. It'd be something like that. So you want to use your Bullinger Bands not as the end all be all. You want to use it in conjunction with other indicators within the technical analysis space, as well as a larger fundamental analysis as well too in the macro news of the finance space. So when we're looking at large cap altcoins, XRP would be one of them, medium cap altcoins, or small cap or micro cap altcoins, you also want to compare them to Bitcoin and see where Bitcoin's at in the macro market cycle. And so if we're looking at Bitcoin right now compared to 2019 and then compared to 2015 as well too, and we look at these moving average crosses when the 200 crossed below the 50 moving average right here, compare this to 2019 when the 200 crossed below the 50 moving average, and then also back in 2015 when the 200 crossed below the 50 moving average as well. Well, in 2019, we saw a further push to the upside of Bitcoin trading upwards of, $20,000, $12,000, $13,000 right here. Whereas in 2015, we saw a little bit of a push to the upside followed by a sell-off further to the downside for Bitcoin. But it wasn't until after that where the 50 moving average crossed below the 200 moving average, the 50 moving average crossing below the 200 in 2019, and the 50 moving average crossing below the 200 moving average just recently this month. But what we saw happen after that back in 2015, Bitcoin consolidated sideways for about a month, and then we saw a breakout. In 2019, Bitcoin saw a little bit of a sell-off to the downside, another 15%, and then traded upwards of, $10,000. And then the Black Swan event took place, but that was about 130 days. So anywhere between 1 month to 5 months, I would expect Bitcoin to consolidate somewhat sideways over the next 30 days, and then some drastic event to take place in under 6 months. Now, what would that drastic event be? It would either be Black Swan event to the downside, or it would be blanket ETF approval for spot Bitcoin ETFs, which would allow massive liquidity to come into the market for Bitcoin to see one of the largest bull runs of all time. What do you guys feel would happen? Well, in my next video, what I'm going to talk about is how the Benner cycle predicts 100+ years of market movement and showing years in which panics have occurred and will occur again, years of good times, high prices, and the time to sell stocks, crypto, and the value of all kinds, and also years of hard times, low prices, and the good time to buy crypto, buy stocks, buy precious metals, buy real estate, and hold until the boom reaches the year of good times, then unload your back of the truck, unload your bags, and going camping on the beaches of the moon. So we're going to be talking about that in the next video. If you guys want to see that video, make sure you subscribe to the channel. And if you want to learn our #1 way to earn passive income online without any crypto trading experience, make sure to join our community by going to bullrunners.com. Click the button on the page. It's free to join. All you have to do is put in your name, your best email address, your best phone number to receive up-to-date information and videos like this. As always, guys, like this video, subscribe to the channel if you want to see more content like this. I will see you on the next video as we back up our trucks all the way to the bank, grab the bags, pack them and stack them, leave no bags left behind, because the spending power of the dollar continues to go down in value. That's a fact. Blockchain technology is going up in interest. That's the truth. And together, we're all going camping on the beaches of the moon. I will see you on the next video. I will see you on bullrunners.com. As always, God bless and stay bullish.